It's only when I looked at the data, I realized the auto index is up 7%. You look at the real estate index, that's up another 6%. You look at the bank nifty, which was supposed to come back, it got a support from SBI, it's got a support middle of the month from HDFC Bank. That is not doing its bit. So in terms of market, the market is not strikingly different than what we, let's say, saw last quarter and in the month of Jan. But there are cracks which are started opening up clearly in select PSU stocks, and I think that trend is here to stay. But what concerns me and what I think is puzzling is that there is just no follow-up buying in private banks. Everybody is saying they are cheap. I think market either is testing patience, or markets perhaps feel that in the second half the slowdown or somewhere what's happening on the liquidity front is going to have impact on the NIMs, because the underperformance in private banks now is very, very stark. So that's really one large pain point for me in the market. And second, I think this is where you need to be a bit watchful. Mark my words. I think best of the auto gains in the near term are behind us. There is a slowdown which has actually started. I mean, I look at very basic data. Tractors are slowing down. Footwear sales are slowing down. QSR sales are slowing down. Real estate is having a base effect. Luxury cars, if you look at the data, what you will get this month, the base effect has kicked in. So I think this time auto numbers are important and they are crucial, because December was that year-end effect, January is the beginning effect, Feb is the real deal for me. So this time the auto dispatch numbers for an index which has done so well, I think would be very, very crucial. So we don't talk about it, but since auto dispatch numbers would be coming later this week, I think for me auto becomes this go-to sector for next couple of days.
Yeah, you'll have the series expiry as well, not just auto sales, but GDP as well as PMI data too, that the market, I guess, is going to digest.
There's nothing large in terms of a forward-looking number this week. There's nothing large in terms of a forward-looking event this week. Frankly, from a market standpoint, GDP number just is not relevant. Aisha, there was a time in 2013-14, we used to only discuss inflation and GDP. Nobody bothered about earnings. That's a setup. Today, GDP is just not bothered. I mean, everybody would look back and say that, oh, it's a backward-looking data. It tells you about last quarter. Who's interested in kya ho gaya? We are interested in kya hone wala hai. So GDP is actually just not the relevant data, which in a sense would just be doing things. The communication, I think, is very well established that we are in a great spot. GDP is doing well. They're earning upgrades. So inflation or a GDP beta is frankly passe, at least in the near term setup. So we can safely ignore it.